Good evening, everybody. We doesn't take too much analysis at this point to pretty much know that we're in wave 3 of this bearish J-hook pattern. So now the analysis comes into analyzing what is the trend doing down here. We can see it's starting to move away from the T-line. We're in the oversold area, and we're getting to be about the same range as wave 1. Now, does the oversold condition tell us anything? Not anything substantial, other than we probably want to be a little bit more cautious down here, or get a little bit more prepared for maybe some reversal, bounce, things that might move the market up, waiting for the T-line to catch up. So the NASDAQ was a little bit less decisive today. Whoops. Kind of doing an inverted hammer. So is this a sign of a possible reversal? Well, at least now we're aware, or should be alerted to the fact that if things open positive, what's our probability factor coming off of inverted hammer? They're probably taking it up. So it'll be important to see how they open the markets tomorrow. Let's see what they're doing after hours. They're up a little bit after hours, but nothing. Yeah, that's not relevant for what for whatever might happen on the open tomorrow. Oh, how come I keep goofing this up? FCL is November. Well, how come I can't remember what November is? It's December. This. Oh, okay, there it is. All right, so crude oil is trading down another 7-8 cents. Okay, yeah, thank you, Doug. Chip, I'm afraid they don't have a lot to show as of yet. Kind of disappointing. So what should be our overall expectation? Now, the fact that we're in the oversold area, we're near wave 3. Now, just because we're in the oversold area doesn't mean that we're getting close to the end, because you can see what happened over here. They went 2 months in the overbought condition and an uptrend. So this is, let's go through what we've got so far that and we've recommended here recently. We can see on NVAX, ever since the gap down, that we could pretty much tell what the trend was doing. As long as it stayed below the T-line, it was still in a downtrend. That makes it much easier to decide what to do with your trades because of the T-line rule. And the strength of the T-line comes from that gap down, trading below the T-line. Very simple strategy at this point. You just stay short until you see a buy signal. And we're going to go into some of these more, because here's your dumpling top, as we're witnessing in Whoops, that's not what I wanted to do. We're seeing in things like Goss. So this is where you decide, all right, if the market's already in a downtrend and I want to go short, what should I be shorting? I probably should be shorting things that are just setting up to be heading lower. So we can see what happened today. They took this right up and tested the T-line and failed. Now that may mean it could be bottoming out here, or if they open this lower, kind of on a double doji, that's confirming our double doji signal telling us we're heading lower, which also confirms in what we would expect coming out of a dumpling top. FLNC, same scenario. Your dumpling top, they're rolling it over. They came up, failed at the 200. If this opens lower, again, that's more force to the downside. And airy, not so much a dumpling top, but another one that if they open lower, the continuation of this downtrend. So here's where you can really enhance your entry strategies. Dumpling top. Opened lower and traded positive most of the day. But what was this telling us? The dumpling top had a gap down, starting that force to the downside. So if we can assume that out of a dumpling top, we've got a strong downtrend potential, where would be the optimal place to short this? It came back through this level. If they opened and started trading lower, that's confirming this gap down selling pressure coming out of that pattern that we can recognize. Again, the dumpling top. Oh, can't read my own handwriting here. Kind of the same scenario here. Is this an inverted hammer signal? No, because your stochastics are still heading down. So what is this likely setting up for? Your bearish doji sandwich. If it opens lower, what's it telling us about this level right here? Not acting as support anymore. Look for much stronger downside moves. So you had a few of those today. For example, Peloton, look where your support level was. Right here, the doji right on that support level. The fact that they took it up and then slammed it back down, giving you a bearish doji sandwich, also illustrated that this level was not acting as support anymore. Now what can we expect? Wave 1, wave 2, going into wave 3. Same situation on PayPal. Whoops. There was that kind of bearish doji sandwich with a booster. Wave 3 is in progress. So here would have been a very high probability entry. But if they opened it and started trading positive, what was our overall assessment of this chart? It's probably pretty strong to the downside. So then when they're taking it up, what should we be anticipating, or what should we be suspicious of? That maybe this is just a bounce, and if it came back down through this level, which would immediately show the bears are back in control, and what were we kind of expecting? Downward move. That becomes a very high probability entry point. And we'll run through some of these real quick because they're all pretty much self-explanatory, that the recommendation on Upworks was wave 1, wave 2, bearish kicker signal, starting wave 3. Now what do we do with this? Same scenario, doji rule. If it opens lower, doji sandwich. If it opens positive, more than likely in the oversold area, they're bouncing it. So at least now, when everybody rhetorically asks, when is this going to bottom out, or where do we take profits? I just do that. At least we've got a much higher degree format of knowing what to do based upon what the signal was on any given day. Here's another one that if this opened lower, giving you kind of a bearish double doji sandwich, break and wave from this level, where do you think your next likely target's going to be? What everybody else might be watching, filling the gap down here. Fizz, this has been a good one, where we'll just stay in short until we see a confirmed buy signal. Now, we also have the, the indication that down at these levels, we're starting to get less selling pressure. So even though there hasn't been a buy signal yet, or a close back up above the T-line, what's our probability factor indicating? They aren't selling this off with any great resiliency. So if you were short this, where would be the logical place to put a stop loss? Right here at today's high. If they are moving in this direction and still trading positive, that's telling us this whole area is acting as a support. Let's go find something better. CPIC, that's your strong sell signal. There's your bearish best friend telling you they were failing to get up above the T-line. What did that tell us when they gapped down? That this downtrend was still in progress. And how long would you want to hold on to this? You see a buy signal and a close above the T-line. But now you're down here in the oversold area, kind of an inverted hammer doji. What should this trend be doing? It should still be heading down. Where would it tell us the bulls were probably a little bit too strong? If they came back up through the high of today. ZIM, look what happened right here as it bounced up a little bit. Notice it wasn't very decisive when it bounced back up. And as soon as it hit the T-line, bearish engulfing, what was that implying to us? Wave 1, wave 2, and wave 3. So at any point in time, when you start seeing things kind of go against your probabilities, you can take profits. And not so much that you can take profits, it's that you've got the analysis to tell us we should be short here. It's heading lower. Now we're trying to decide, all right, how much further can it go down? And what was a little bit of a warning here? Look how they gapped it down in the oversold condition and seeing a little bit of buying. Any rationale of going down to the lows of March 2020? WB, don't know. We don't have to be that that analytical. If you'll watch your financial news stations, every day they've got people on there that are managing money, surprisingly, saying, well, we're probably in an area where you can start buying, but they've been saying that for 2 weeks now. Just to kind of illustrate, when this was happening, which was, remember, we kind of did a fine-tune analysis to say this is not a reversal signal. It's not quite a bullish engulfing signal, so be a little bit more careful. And on this day, you definitely wanted to be careful because that was the day they were Was that the day they were announcing the CPI numbers? But every single day you hear these professional money managers say, oh, you can be buying a little bit down here, and if it goes lower, you can buy some more. And I'm thinking, you don't know whether it's going to go higher or lower. Why are you buying now? Which is obvious. They don't know when there's been a bottom. They think there should be a bottom because it's gone down so, or things have gone down so much. That's unfortunately kind of a shoot from the hip type investing. This is why I'm so adamant about analyzing what the charts are telling you, because it doesn't matter what all the talking head professionals are saying. Just analyze what the chart is saying. Yeah, most of their time frames, again, are long-term, saying you could buy here, and because it's going to be much higher in 2 or 3 years. Maybe. If you did that in 2007, maybe you got back to even about, how many, 8 years later? Yeah, so this is why, Travis, this is why I constantly put in the morning or evening comments and the YouTubes that right now there's nothing to tell you that you don't want to stay predominantly short. C day, stay short. Light. Wave 1, wave 2. Look how wave 3 started with your bearish best friend signal. So this is the information that gives you that head start or that impetus to be in a specific direction. So when we can recognize when a pattern is setting up, and we can recognize that pattern being started with a strong signal, that's just that much more conviction of that trend going in the correct direction or the expected direction. Daku, same scenario. There's your bearish gap down. And this is, I'll point this out every time I see it. Anytime you see him come right back up to the T-line, which is not there on everybody else's charts, and they fade off, that's a strong implication that things are still in a much, or if they're not bullish yet, you're still in a bearish mode. And Etsy. This is what we're looking for. Kind of a rounding top. On that day, you have a doji. The candlestick's heading down. And if it opened lower the next day, what type of signal are we expecting based upon this setup? A doji sandwich, same magnitude as this, which immediately tells us this level right here that appeared to be acting as a support area is not acting as a support area. Much stronger prospects of things heading in the heading further down. So kicker signal on Amazon bounces up and down, but what's the overall trend? Below the T line. Apple up and down, but what's the overall trend right now? You're still trading below the T line. Tesla. So here's that same scenario. Which direction would you suspect Tesla is heading right now? What's all the things that we can analyze on this chart? One, pretty much a trend channel. Two, stochastics are still heading lower. means we might not have hit a bottom. There's your evening star signal, failure at that level. There's your gap down through the 50, heading right for the support level. Well, it may have supported. However, stochastic's still heading down. What's that implication? That if they come back through this level, the force of this downtrend is still in progress, and this area right here is not going to act as a support anymore. Extremely good place to start shorting, because that tells you they're out of this trend channel. Now look for the next target. There's a gap to fill down here, so more downside. Netflix, kind of the same scenario. Failed right at the T-line. Doji, if it opens lower, that magnitude, that's more than likely telling you they're going to go down through this level. If you were short on Tesla, Jimmy, I guess the rhetorical question would be, are you in the oversold area? Number one. Number two, did you see a reversal signal today? Well, obviously you're not in the oversold area. And number two, no, that was just an up day. JD, usually if I think we're in an uptrend or a downtrend, I'll pick a point. So if I was recommending shorting Tesla and it opened at, what was the low today? 270.33. What would be a safe place to go short? Probably at 270. Is it very specific? No, but it's telling us that if it came through there, it was heading in the direction that we wanted to go. If I was going to short this, what do we say? If it traded back below, but down below, which one was this? Below 36, you could start going short, because that would tell you they're going in this direction. Well, most of the day, this one positive. I think near the end of the day, it came back down here. So I'm picking a spot that doesn't necessarily have to be a very highly technical level. It's just a level that says it's going in the direction we expect it to without it going in the or opening at that level and then bouncing up. It's trading at a level that if they were trading down through that area, the sellers are probably in control. I'll have a few more, JD, let me get through some of these. So as you can see in NVIDIA, they've never been able to get it back up above the T-line. Now they've had what I call bad hair days, that if you're short and it was trading up here, thinking, oh man, got that one wrong. But the thing that I've always remembered or learned is you still wait for the end of the day, because you don't know what overall investor sentiment. So if it was up here at 10:30 in the morning and it finished up there late in the day going into the close, that's telling you they are buying and they're not selling it off. But I've discovered so many times that if you can see what your trend is, which means there's bearish sentiment, and what is the last resort or the last analysis that we have? that we're in a downtrend until they close above the T-line. So I always wait to make sure they're actually closing above the T-line. And that's from more of experience than anything else, that there's been so many times I'm saying, oh man, I guessed wrong or picked out a bad short. Let's close it out. And a high percentage of the time, it goes right back into the direction that we was expecting it to in the first place. That was the Wednesday, the freaky Fed day you expected. Yes, so that's why you always wait, because obviously on any day where they're announcing something, you don't know what the reaction is going to be. Now on that day, again, if they closed it up here, that would have meant things were relatively bullish. I shouldn't be short anymore. Okay, so if we're trying to find the best or strongest trades in a downtrend, there's different points of that trend, obviously, in the market that you want to be a little bit more aggressive, and it's usually when you just start seeing the sell signals. Or the further this market goes down, again, the higher the risk as far as investor sentiment that we might not see things pop back up. Again, might not be a reversal, just a pop back up. So now I can make my decision that if I'm looking for things that are creating not only a down move, but the strongest down move, and that's things like your kicker signal, your bearish best friend, that's what we're looking for. So if I was shorting anything right now, it would follow along those same lines, that I want to find something that is just now showing good bearish strength, like a bearish best friend breakdown through this level. But this might be much safer to be shorting than something that's already had a big move to the downside. It's just now breaking to the downside. So things like this, where we can see the rolling over and then they gap it down, those are the type of things that tell us that not only is the bearish sentiment starting to take control, oh, what have I done? No, maybe it's this one. No, go the type that doesn't like to make the same mistake 7 times. That if I can see this pattern and the gap down, telling me this has a lot of force to the downside, that's going to be something I'm more apt to go after versus something that already, well, be able to, something like this, where it's already had a move. It could still be going lower, but what's my risk reward at this point? I should have been shorting up here. I should have been shorting up here. Now what's my strategy on this one? You probably want to stay short until you see a reversal signal. So that one also has the indication that they're now breaking it down big. So anytime, again, you see that doji in the oversold area, you've got two criterias. One, they open a positive, they're probably taking it up. If they open it lower, they're still taking it down. Now, what happens once something is selling off? Just investor sentiment, as we know, I say we know, we've probably experienced where we just can't stand the pain anymore. It's not going up, get us out, and that's where they start slamming it to the downside. These type of things, this type of situation right here, look at your bearish double doji. Then they couldn't hold the, that kind of a, they couldn't hold the 200. So what's the implication if you decided to start shorting here? You had a bearish doji sandwich. The probabilities are telling us we're heading lower. Are you always going to catch a move like this? Definitely not. But the probabilities of being in a move like this are much greater when you're using the patterns because of what investor sentiment is pretty much telling us as far as the pattern is concerned. So here's AMC. Notice what the strength of this one is doing. Look at our little bullish candle. And then they opened it at the previous day's open and took it down. There's your bearish trend kicker signal. Bullish candle. If they gap it down on weakness tomorrow, a bearish trend kicker signal says you can be shorting it right away. Verve, pretty much told you they weren't holding up anymore. Where do you think your next likely target is going to be? Down here to the 200. And Rev, I always like to keep the symbols with the same letters. There's your slow curve on Revlon. And what's creating the increased probabilities are heading lower? Slow curve, followed by a bearish doji sandwich, breaking out through this level. Now you're looking at that target. So this is not rocket science. This is just identifying how human nature works the same way time after time. So once again, whether you're going long or short, what you can identify as things that everybody else would be watching, like resistance levels, when they gap up through that resistance level, what's it basically telling us about investor sentiment decision making? They don't give a hoot anymore about this resistance level. And so when they're trading up positive, what can we recognize as a candlestick investor? Strong price move, wave one, wave two of a J hook going into wave three. So do you want to be 100% short in this market right now? Probably not. So you might have a few long positions in place. And if you're not real anxious or you don't like shorting the market, then you have alternatives of the short funds such as, I know what the problem is. I don't have the lights on. I have a hard time reading my own. So here's your, whoops, let's get rid of that from the last chart. There's your classic on the short fund of the semiconductors. Well, is that an unusual pattern? No, because we're looking at the opposite in downtrends, various J-hook patterns that are working. Well, for crying out loud. Did I just type that wrong? H-I-E-S. Oh, that won't come up over here. Hibbs is another one that's a bear fund. TAZ or TZA. Is it 2 B's? No, that would be way too many. Is it? E-S? No, it's H-I-B-S. Some of them don't come up over here. But there's your TZA, the small cap bear fund, acting well. Yeah, there's probably good shorts right now in the oil sector because we've seen crude oil just drop. It's down into the 70s now. So here's another classic case of when everybody is running around saying, oh, Warren Buffett's buying Occidental stock. It must be good. He must be right. That was, how far? That was a good 15, 20% ago. So just because you hear somebody is buying something doesn't mean it's going to be correct for the time frame that you might be interested in owning something. You might be interested in owning Occidental for the next 5 years. We're more interested in what's happening over the next 5 weeks. So Ranger was another one. And again, I'm going to illustrate this little point here. If you're in an uptrend, you see a pattern pull back and start back up. If they do a sell signal before they get to this level, that not only tells you they're not going higher, but that pretty much tells you the bulls are now discouraged and the bears have taken control, and that usually starts with a good, strong uptrend. Yes, but Kath, that's a good example of why the information or the reason that I forgot what I was saying. The information that everybody knows as far as or projects as far as fundamental reasons for owning a stock is not the main criteria for what moves stock prices. It's still investor sentiment. So over the long term, yes, maybe that improves the stock price. But over the short term, if everybody's selling the oils, it doesn't matter how great Occidental or anybody else is, I'm not even on Occidental, I'm on Ranger. It doesn't matter how good people expect their earnings to be, the price can still go down. Is it a good long-term hold? Yes, but now you're kind of rationalizing, not you, but just anybody, rationalizing that, oh yeah, this is a good company, I'll hold it long-term, it will come back, but it might not come back for 2 years. Yes. Well, Travis, if you're worth billions of dollars, you don't have to worry so much about whether your positions are working this month or this year or even this decade. You're buying them on the basis that, hold this, but he still eats well no matter which way his portfolio is going at any one time. What we're trying to do, or what I'm trying to do for my own wealth, is be much more fine-tuned to what's going on right now because I don't want to hold on to positions for 2, 3, 5 years. So here's another one. Here, you can kind of see what's happening. They failed at this level. Now you might be in the next leg to the downside. Now, when I say you might be in the next leg to the downside, remember, the longer something goes down, at some point, everybody's going to start saying, oh, I can't stand the pain anymore, just get me out. And that's why we're always attuned to the fact that where do most people sell? They panic sell at the bottom. And that's exactly what the Japanese rice traders have have us alerted to based upon the chart. So NTR, is that an inverted hammer today? Or the stochastic's not in the oversold area yet? Is that the potential of a bearish doji sandwich? That's starting with the force of that gap down through the last little resistance level. And there you go, Will. LIND. There's that prospect that if you're in an uptrend, they pull back, they start the uptrend, and you see a sell signal well before they get to the new high or the last high. That tells you the bears are now taking control. You've got two prospects on a chart like this. One might have this trend or this wedge formation. And your wedge formation. So that makes it a little bit easier to see when they started selling and at what level might they be buying. Well, if they started buying right in here, that would be a good indication that this wedge was still in progress. But if they broke down through this level, telling you this wedge isn't working anymore, now we've got a different trend or a different pattern. Wave 1, wave 2, wave 3 being the same as wave 1. EVTL. I think this is now what they're calling the railroad track. The railroad track is a big move and then a big reversal move, which means if they open this lower tomorrow and you had bought sometime during this session and didn't close out here, close out the trade. It's not only not going to work, but it might even be bearish. LPI is another one of the energy stocks that rolled over. There's your bearish kicker. There's your gap down through what would be perceived as your last support level. That's telling you there's a lot of force still to the downside. And I think somebody pointed this one out today. Nice slow curve. There's your double doji sandwich, but same implications. So you've had a long downtrend. Whoops, long downtrend. and now it's rolling over. What do you think's happening to investor sentiment after all this time and the market's going down? There's a bunch of people saying, I can't stand this anymore. Get me out. And that's where they start really knocking prices down. Now, that puts you in situations where you can take advantage of a good short trade, but it also puts you into knowing where everybody is panic selling. And what do we know as an investor or investor? When everybody's panic selling at the bottom, start looking for buying. Is EVTL shortable? It is, but you need more confirmation. Meaning you want to see it trade lower. Oh boy, I think, well, my dad gave me one share of Ezor Express probably when I was either somewhere around 9 or 10 years old. And the big thing was that it split 2 for 1, and I now had 2 shares of Ezor Express. But that's where I started becoming interested in stock prices, because every single day I'd open up the newspaper after it arrived, looked in the stock section at the back of the paper, and look at Ezor Express to see if it went up an eighth, down an eighth, up a quarter, down a quarter. And that's what got me hooked on investing. All right, so what we're really wanting to look for right now is which ones have the best opportunities or the best downside potential. Dumpling tops are prevalent in this market, just like the opposite, the fry pan bottom. And the expectation is that big slam to the downside. STEM, well, slower. A dumpling top, almost dumpling top scoop type pattern. Same scenario. When they come out of these patterns, they're now showing the force. That wasn't the right place for that one. Well, I guess it's kind of a big top. I had some better ones. Bio, there's your kind of your dumpling top, and look what the results are. Coming down through that level tells you there's probably still a lot more downside. I'm reading what Bob is. They took it. 2 rails with a tie, hence the name. All right. Yes. So I guess the name of it is railroad tracks. I don't know where that name came from, but I've discovered that there's a lot of names given to patterns that really aren't candlestick patterns. They're just patterns that would look like a pattern. Oh, that one's more of a breakdown through this level. I thought I had a couple more dumpling tops, maybe not. That one's much better. Rolling over. So if this opens lower tomorrow, showing you this level right here is not acting as a support level anymore. then where would you think your next target would likely be? All the way down here to the 200. And finding the specific sectors that they also, like mag in the silver area. There's your bearish doji sandwich, gap down through this level. That's a good indication that there's not any more support, well, at least until down here. So what we essentially want to do with a lot of these evaluations of the pattern and the signals that confirm the pattern is which pattern is confirming with the strongest sell confirmation. All right, so I forget which one we were looking at that was a kind of a railroad track. To me, they're not, well, as I say, you can call them whatever you want to. Just on the purest form, now I can't remember which one it was. Was it EV, EL? Yeah. So on the purest form, it's that strong bearish harami looking for confirmation. All right, so with all that, fundamental analysis doesn't really matter at this point. You can make your conjectures, your analysis that this downtrend obviously is created by the fact that inflation is the controlling factor of everybody's investment decisions. But the further this market goes down, the more you have to start thinking, all right, investor sentiment also says, well, maybe prices are getting back to the point where they're a bargain. Let's start buying. Now, will that happen here? We have no idea. But we do have the ability to analyze what decisions are being made down here. Because if we happen to see it open lower tomorrow and do a bullish engulfing, we're already prepared to think, all right, they're doing some buying down here. Maybe we should start covering some of our short positions. On the other hand, if it opens up here and then drifts lower, we can still calculate that we're still on a downtrend. Travis, I know that, what is it? Is it Varney on Fox Business News is saying, oh, that's the safest thing to put your money in a 2-year Treasury note and get your 4%. What's wrong with that? That's probably nothing wrong with that if you're willing to settle for 4%. But all these strategies kind of go out the window if you can identify price moves that might produce, I'll go back to this one, might produce a 22% return in 2 weeks. That's what we're kind of looking for, unless you've got so much money that you just want to stick it away and make a very small safe percentage. But if you're trading and if you're trying to expand your wealth quickly, not quickly, but much more rapidly than 4% over a 2-year period, you want to take advantage of what investor sentiment is showing us, that we can make much bigger gains than that. Did inflation affected the market the same way back in the 80s? Oh, well, I don't know whether the trade action was the same. I can't remember that far back. I was That time I was a stockbroker with Kidder Peabody. And unfortunately, back in the 80s, the Dow was probably about 900. And it would go up to 1,000. And Joseph Granville would come out and say, short the market, it's way overbought. And it would fall back to 750. It did that for 8 years. Now, inflation hit, what year was it? 1981, 82. And the market was very lethargic at that time. Just couldn't do anything. Our strategy at that time, with Kidder Peabody being a big underwriter of utility companies, utility stocks, the rationale at that point was you could buy a utility company or utility stock, get an 8.2% dividend return, and hopefully over the next year or two would go up 6, 8, 10%. So your overall return would be approximately 12% a year. That was the strategy. At that time, I can't think of stocks back then that were the big stocks, meaning things like Apple or Amazon, all the ones that are kind of in the limelight today. I think inflation went down as the 80s moved. Okay. Okay. Yeah, so the 70s was a recession. I just graduated from college in 75, and the only place you could get a job was Houston, Texas. So I packed my bag and headed for Houston, Texas, and sat on my suitcase out in front of the YMCA downtown, trying to figure if that was the best place to stay. All right, so if the analysis doesn't necessarily need to be whether the market's going to do well or not, what the analysis is, and so there's been this big debate of recession. Are we in a recession now? Are we going to be going into a recession next year? That doesn't mean a hill of beans. What we want to analyze is what is the market doing right now? That's where we're going to make the money. So if they think, or if the market thinks a recession is coming, that's all we have to care about, is whether to be long or short this market. Yeah, the market looks forward somewhere around 6 to 9 months ahead of time. So, but as I say, it doesn't matter. What the market was telling us is we're in a downtrend. All we have to do analyze now is how long does this downtrend remain before you see some buying. So, all right, guess that's my soapbox for the night. All right, are there any general questions on candlesticks? If not, Jim, let's go ahead and do the double line. And then, whoops, now 3.1 seconds, do the next double line. Okay. EXLS. That's now the car out of the barn, or the cow out of the barn. Jimmy, if you were short, you stay short. Probably your first target is see if they're going to start bouncing off the 200. FLNC, one that you could be shorting if it opens lower tomorrow. Notice today they came up and failed right at the 200 and sold off. There's still a gap down in this area. So you could short this one on weakness, CELH. There's your double doji setup, which means if they open this one lower tomorrow, you can short immediately because that double doji tells you you've still got some more downside. Now these stocks all gapped up today. Wouldn't necessarily be a buyer of them until, let's see, on Las Vegas Sands breaks out through this level. Wynn Resorts needs to break out through this level. So they definitely need to have confirmation before you go after them aggressively for two reasons. One, you want to see that they're being confirmed buying. And two, if the market's heading down, the strength of any bullish trades may be a little bit questionable just because of the overall market bearishness. Yield, you can be shorting this one on weakness. ISPC, that's not a good looking chart. What did you want to see on a positive open today? It trading positive. That's kind of put the death knell into this one. If you were long, it would have to open positive and trade positive tomorrow. If it opens lower, yeah, you probably want to close it out. There's nothing there. Unless there's some sort of news you know of that might move it big. This one, you get ready to short. Again, notice the failure at the 200. Now close below the T line. Where do you think the next target could be? Back down here to the 50. And Matador, like all the other oils, gap down. Right now, I would be short until you see a buy signal. Etsy, I would be going short on a lower open tomorrow. Starbucks, another double doji setup. Observe the obvious. When they took it up today, where did they fail? Right at a level everybody else was watching. So if this opened lower tomorrow, expect a double doji, right here, your double doji setup, which means this candle right here would kind of break this level. Beat, you could be buying this one. I would check to see what the news was. Kind of your bullish flutter kicker, J-hook pattern setup. That's a good strong chart. And BABA, stay short, or if you're thinking of going short, whoops, come on. Be ready to short on weakness tomorrow. Look at your bearish kicker signal, your failure. Even though you're in the oversold area, there's nothing yet showing you the bulls are trying to take control. And Rivian, another one that if this opens lower tomorrow after failing right at the 50, your bearish double doji setup. LNG, there's your bearish best friend. You could short this one, next target probably down here at the 200. Chewy, whoops. Another one that if it opens lower after failing to get up above the T line today, would tell you your bearish J-hook pattern is still working. Fubo. Fubo, I don't know whether you could short this one at this price. If you could, you short it on anything below or on a lower open, failing at the 50. Other than that, I probably wouldn't be long or short. The short cues, you just stay long. I'd probably put a safety stop at today's low. They have enough strength to come back through that level. That means the market has turned. Let's see, I think we did this one. FLNC. Whoops. FLNC. Another one you can short on weakness. Yeah, I think they were, opening up again in China, the gambling casinos. Yield you can short on weakness. Shopify, you can short this one on weakness, once again being confirmed by the fact they went up to the T-line and failed at that level. MLCO, again, one of the reasons, is that one of the gambling stocks? That's got the strongest of all the charts because it did break through this level, but it did fail right at the 200. So if you're long or you're thinking of going long, it still needs to see positive trading tomorrow and stay in positive. If I was buying on positive trading tomorrow, I wouldn't want to see it close back below the halfway point of this candle, which would put you back into the trading range. Okay, so we've got crude oil trading lower. Now remember, if crude oil sometimes is trading lower, that's very bullish for the market. That means things are going to cost less and the market goes up. Or other times, if crude oil is trading lower, that's telling you the sentiment is up. That's telling us the economy is getting worse. That's bad for the market. But right now, crude oil, after breaking this level, looks like it could still be heading lower. Well. Because it's kind of broken this little trend support. So tomorrow we want to watch to see how they open the market. It looks like they're, right now it's up 186 points. The E-minis are up, showing the market's going to be up 25 points. But remember, this is not significant until about 7 minutes before the market opens. Okay, I guess with that, everybody have a good evening. Let's see, would you short on BTU? Green candle. You short if it trades below today's open? Yes. If it came back down through here, maybe even halfway down this candle, that would tell you they failed at the 200. They're still selling it off. All right, everybody, have a good evening. We will see you bright and early tomorrow morning in the chat rooms. We'll see you then.